Is this officially the best dividend ETF on the market? Many of you already have it in your portfolio. Or, at least, you're thinking about it. The VanEck Morningstar Developed Markets Dividend Leaders ETF has become the second most popular dividend fund in all of Europe. While this fund has been on the market for about 10 years, it flew under the radar for a very long time. Take a look at this chart showing the growth of the fund's volume. It's only in the last few years that this ETF really gained momentum, with its total assets literally exploding. The demand is incredibly strong. Since the start of this year alone, 2.5 billion euros have flowed into this fund. In comparison, the legendary Vanguard Dividend ETF only grew by about 1.5 billion euros in the same period. The momentum is undeniable, and the king is about to lose his throne. But is this just hype, or is it actually a solid investment? Today, we're taking a deep dive into the VanEck Dividend ETF. This is not financial advice, just my own opinions and experiences. Let's start with this very interesting chart. This shows the ETF's performance since it launched back in May 2016. The green area tracks the price alone, while the blue line represents the total return. That's the price gains plus all dividends reinvested. Looking at this chart, we can already see two main reasons why this ETF has become so popular. First, the increase in share price alone has been phenomenal. We are looking at over 100% growth since its inception. For a dividend-focused ETF, that kind of performance is absolutely impressive. But there is a second key takeaway from this graph. The dividend payouts have remained consistently high. Usually, when a dividend ETF sees its price skyrocket, the dividend yield starts to look tiny, but that's not the case here. The yields have averaged over 4%. The fact that the yield stayed high while the price was climbing tells us one thing: the dividends must have grown significantly over time. We'll look at those dividend numbers in more detail later on. Altogether, the VanEck ETF has delivered a total return of just over 200% since it started. That averages out to nearly 12% per year. And for a strategy focused on dividends, those are some seriously impressive numbers. Speaking of total return, let's look at how it stacks up against the competition. This chart compares the three most popular dividend ETFs in Europe: VanEck, Vanguard, and iShares. Since these funds have all been on the market for a long time, we can see a clear 10-year comparison. As you can see, VanEck has outperformed the others by a wide margin. What's interesting is that until 2022, all three were moving almost at the same level. It was only after 2022 that VanEck really started to pull ahead. So, what happened in 2022? That was when central banks began raising interest rates, which brought the European banking sector back to life. Because the VanEck ETF is heavily invested in financial stocks, it was perfectly positioned to ride that wave. But let's take this total return comparison one step further. I'm going to add the MSCI World Index to the chart to see how VanEck compares to the broader market. This is where it gets really interesting. Over the last 10 years, this dividend ETF actually kept up with the MSCI World. We can't predict the future, of course, but the performance we've seen so far is truly incredible. If you're enjoying the video, a like and subscribe really helps the channel. Thanks! Now, let's take a closer look at some key facts for this ETF. This is a physically replicating fund that holds 100 different positions and is traded in euros. It has been on the market for nearly a decade and has built up an impressive volume of over 7 billion euros. With an annual fee of 0.38%, the costs stay well within a reasonable range. One thing to note is that the fund is based in the Netherlands, which might result in a small tax disadvantage on dividends for some investors. So far, so good. Nothing too out of the ordinary. But here is where it gets interesting. The massive performance of this ETF is all thanks to the specific index it tracks. It follows the Morningstar Developed Markets Large Cap Dividend Leaders Screened Select Index. What does it do? It seeks the top 100 income payers globally, selected for their dividend yields, resilience, and likely growth. So, by focusing on these top performers, you get a portfolio that prioritizes stability and sustainable payouts. To me, that sounds like a very solid setup. And because financially strong, profitable companies tend to do well over time, it's no surprise that this ETF has delivered such outstanding price growth. Now, let's take a closer look at what is actually inside this fund. I'm using Extra ETF for this because their breakdown is incredibly easy to follow. First, let's check out the country allocation. Aside from its great performance, this geographical mix is exactly why this ETF is so popular in Europe. It's a refreshing blend of developed markets, where, for once, the US doesn't make up 50% or 70% of the total. In fact, Europe is the main focus here, making up about 50% of the fund. I really like that it includes non-EU countries like the UK and Switzerland. As you can see, this creates a solid diversification across different currencies. Now, let's move on to the sectors. We have financials, energy, healthcare, and so on. You'll notice that technology is almost non-existent here. This sector allocation is no surprise for a high-yield ETF, and honestly, there's not much to complain about. The financial sector's weight is over 30%, which is pushing it, but still acceptable. Luckily, the ETF was recently rebalanced. Financials used to be as high as 40%. Looking at the top 10 holdings, we see very reliable, well-known dividend payers from various countries. To me, this selection looks really strong. However, keep in mind that these 10 companies alone make up over 30% of the entire fund. To wrap things up, I'm definitely happy with how this ETF is built. However, I wouldn't go all in on this one. With only 100 companies and a heavy concentration in the top 10, it's just a bit too focused for a single holding strategy. But how does the cash flow look? I have to say, pretty good. Since its launch, the ETF has achieved an average dividend yield of almost 4.5%. That is very strong, especially when you consider the phenomenal share price growth we've seen. Usually, when prices go up this fast, the percentage yield gets pushed down. Yet, the fund managed to deliver a solid return over the entire 10-year period. This only works if there is consistent dividend growth behind it, and indeed, since its inception, the ETF has delivered an average dividend growth of 5.4%, which is fantastic for a high-yield fund. In this chart, we can see the annual payouts. What I really like is how stable these payouts generally are. However, during the pandemic year, the dividends were cut significantly. This sharp drop shows once again that Europe-focused ETFs don't play in the same stability league as US ETFs. Take a look at the payouts for the SPDR S&P US Dividend Aristocrats. In 2020, they actually increased their dividends. But that's just a side note. Let's get back to the VanEck. The recovery after 2020 was fast and powerful, so these dividend cuts might be forgivable. In the last 2 years, the dividends dropped slightly, but that was a common trend for many dividend ETFs. Since the ETF's price has climbed quite high recently, the percentage yield has naturally dipped a bit. Nevertheless, we've seen that the VanEck has delivered high payouts with solid growth over many years. I can easily imagine the price correcting or moving sideways for a while, which, to be honest, might actually be a healthy development. If that happens, we could see yields back in the 4.5% to 5% range. By the way, the fund pays out 4 times a year, in March, June, September, and December. However, these 4 payments are not distributed evenly at all. Keep in mind that half of the annual dividend is paid out in June alone. We've now talked about performance, allocation, and dividends. You have to admit, it all sounds very impressive. But is the VanEck actually the best dividend ETF out there? There's no question that this fund plays in the top league, and there's a reason it's soon going to be the largest dividend ETF available in Europe. However, I wouldn't call it the best right away. In my opinion, there are 2 globally diversified dividend ETFs that are just as good. Those are the Vanguard FTSE All-World High Dividend Yield and the L&G Global Quality Dividends. Both are extremely well diversified and offer a completely set-and-forget investment. They are ideal for long-term investors. However, when it comes to dividends, the VanEck ETF has delivered slightly better numbers than the Vanguard. Whether the new L&G ETF can keep up with the VanEck will be clear in time, but the chances look good. All right, that's it for today. Do you already have the VanEck ETF in your portfolio, or are you planning to buy it? Do you use it as a small addition or as a core investment? Let me know your thoughts in the comments. Thanks for watching, and I'll see you next time.